to help us understand the factors moving oil prices this morning, we're joined by Vandana Hari, founder with Vanda Insights, speaking to us this morning from Singapore. Vandana, very good morning to you. So basically, we are seeing a slew of factors affecting oil prices this morning, including China's reopening, Western sanctions, and also OPEC's latest decision. So among those factors, what's the biggest driver of today's rally in oil prices?
Morning, Henry. So I would say the single key factor behind the run-up in prices that we're seeing this morning is probably the market gaining confidence once again that China is progressing towards reopening its economy, relaxing the very strict zero COVID policy that they've had. So we have seen reports through last week, but also over the weekend, that more Chinese cities are relaxing rules for testing, for instance, for residents to enter public places. So, China, this is what I call a China pivot that the market has been paying very close attention to. By no means is it going to be a straight line or something easy for the market to assess and factor in. I expect it to be confusing, potentially chaotic, 2 steps forward, 1 step back. It's pretty, uncharted territory, essentially, for the Chinese government. But expect this factor to remain key for the oil markets in the coming weeks and months.
Mm-hmm. And certainly lots of uncertainties, especially at a time when we're talking about the biggest tranche of sanctions by Western countries on Russian oil to date to take effective later today on Monday. So how big do you think their impact to be?
So the sanctions had been gradually priced into oil markets. The sanctions that the EU basically completely halting all seaborne imports of Russian crude starting today, and it's going to do a similar measure with regard to Russian product imports starting February 5. These were agreed back in June of this year. So the market has been gradually factoring in, which is not to say that there wasn't uncertainty. I think the bigger uncertainty was probably created by their coming up with this price cap mechanism almost as an afterthought. They managed to agree to set the cap at $60 per barrel. And basically, as you were laying out earlier, what this means is that the third countries that continue to import Russian crude after today will be able to avail themselves of EU-based shipping services, insurance, and P&I clubs, as long as they are willing, as long as they are buying the crude below the cap. Now, but however, the cap is practically inconsequential. It's already been set a good $5 above where Russian crude is already trading. China and India, who are the major buyers of Russian crude and will remain so because they are not part of the sanctions regime, have stayed away from the price cap. I do not expect them to join it at any point as either. So, basically just ended up being a sort of a political maneuver. It's not really going to crush Russian oil revenues as it had intended to do, which is why I say it's basically an inconsequential. A lot of buzz around it, but it's not a factor anymore.
Mm-hmm. And also we have the OPEC Plus decision on oil output this weekend. So how recession worries played into those decisions?
Yeah, so a couple of points I'd like to make on that. One is that OPEC rolled forward, rolled over its current production targets, not just for a month or two, actually for the next 6 months, because the next ministerial meeting has been set for June of next year, which means that the next policy decision that they will be making will be for July of next year. Of course, they said they are open to calling emergency meetings if they need to tweak their production targets in between. So that's quite a departure from what we've seen over the past several months of monthly meetings. So it seems to me that OPEC is trying to inject at least some degree of predictability and stability in the markets. The second is I think it also removes the occurrence of what we saw a couple of weeks ago, basically the Wall Street Journal writing that OPEC was looking to increase output. So the chances of the market speculating every month and then the prices moving as a result of those speculations and news reports. So I think the chances of that are going to be eliminated as well, given that OPEC has said it's going to stay the course for the next 6 months.
All right, Vandana, thank you so much indeed for your analysis. Vandana Hari, founder with Vanda Insights.